The closing bell of the first quarter of 2026 did not just signal the end of a typical trading day, it marked a seismic shift in the global technology landscape that will be studied for years to come. When the financial results for advanced micro devices crossed the wires, the reaction was immediate, intense, and historic. The stock price did not just rise, it ignited, surging 18% in a single afternoon of trading. To understand the gravity of this move, one must look past the simple green numbers on a screen. For a company with the massive market capitalization of AMD to jump by nearly 1/5 of its total value in a few hours is a rare phenomenon. It represents what Wall Street calls a structural repricing, a moment when the collective consensus of the market shifts from skepticism to a profound realization of a new reality. The architects of this surge were led by Dr. Lisa Su, the visionary leader who has spent the last decade transforming AMD from a struggling processor manufacturer into a titan of the digital age. The report was a masterclass in exceeding expectations. Revenue figures, earnings per share, and forward-looking guidance for the data center segment all shattered the predictions of even the most optimistic analysts. This was not a fluke or a temporary bump in sales. It was the culmination of a multi-year strategy to position AMD at the absolute center of the artificial intelligence infrastructure boom. By the early months of 2026, the world had moved beyond the initial hype of generative AI and into a phase of massive industrial-scale deployment. North America and Asia were leading the charge, with hyperscale data center operators pouring billions of dollars into the hardware required to power the next generation of large language models. For years, the narrative surrounding the semiconductor industry was dominated by a single name. NVIDIA had established what many believed to be an untouchable monopoly, a walled garden of proprietary software and cutting-edge chips. However, the 18% surge in AMD stock signals that the monopoly has officially transitioned into a duopoly. This market reaction was an acknowledgement that AMD is no longer just a backup option or a cheaper alternative. It has become a primary architect of the world's AI foundations. This journey from a scrappy central processing unit underdog to a dominant infrastructure power is one of the most significant corporate turnarounds in history. The groundwork for this explosion was laid by the legacy of the MI300 series, a product line that proved AMD could compete at the highest levels of performance and efficiency. One of the most critical factors in this first quarter success was the masterful management of the supply chain. While other players struggled with shortages, AMD had spent the preceding years securing massive capacity for high bandwidth memory. By partnering closely with manufacturers and ensuring a steady flow of these essential components, they were able to meet a level of demand that their competitors simply could not satisfy alone. This allowed AMD to step in precisely when the world's largest tech companies, such as Microsoft Azure, Meta, and Google Cloud, were desperate for hardware. These massive entities, often referred to as hyperscalers, were no longer content with relying on a single supplier. They needed a viable, high-performance second source to ensure their own growth remained unhindered. This is where the strategic philosophy of AMD began to pay massive dividends. While their primary competitor favored a closed system that forced users into a specific ecosystem, Dr. Lisa Su championed an open ecosystem approach. This philosophy allowed data center operators to integrate AMD hardware more easily into their existing frameworks without being locked into a single vendor's software. This flexibility became a powerful catalyst for adoption. In the high-stakes world of Tier 1 data centers, the ability to customize and scale without artificial barriers is worth billions. The market finally recognized that AMD's open philosophy was not just a secondary choice, but a strategic advantage that appealed to the long-term interests of the world's biggest technology spenders. The macroeconomic environment of early 2026 also played a vital role in creating this perfect storm. As interest rates began to stabilize and big tech companies finalized their massive capital expenditure budgets, the stage was set for a historic hardware rollout. The world was hungry for compute power, and AMD was ready with the right products at the right time. This was a moment where the potential of AI finally met the reality of massive revenue. The 18% leap was the sound of 1,000 analytical models being updated simultaneously. It was the sound of the market realizing that the ceiling for AMD was much higher than previously imagined. But that is not the most important number. To truly understand why the stock experienced such an unprecedented surge, We have to look deeper than the surface level financial reports. We have to look at what is happening inside the tier 1 data centers and how the fundamental architecture of the internet is changing. The move to 2026 was not just about selling more chips. It was about a fundamental shift in how the industry views the future of processing power. Before we continue, subscribe to the channel and tell us in the comments where you are watching from. The story of this AI arms race is only just beginning, and the internal dynamics of these massive server farms are where the true battle for dominance is being fought. Inside the humming rows of server racks that now define the backbone of the global economy, the financial impact of the first quarter of 2026 is most visible. The data center division of AMD reported a revenue increase that can only be described as explosive. Year-over-year growth reached over 60%, a figure that silenced critics who believed the company could not scale its artificial intelligence offerings fast enough. This growth was primarily fueled by the massive adoption of the Instinct series of accelerators. It turns out that the appetite for high-performance compute is far from saturated. In fact, it is accelerating. Every server rack filled with AMD hardware represents a direct shift in market share. For years, these facilities were essentially monochrome, dominated by a single brand of hardware. Now, they are becoming increasingly diverse. The 60% growth rate is a testament to the fact that the supply chain constraints that once held AMD back have been systematically dismantled. They are now moving product as fast as the manufacturing lines can produce it. The real breakthrough, however, was not just in the silicon. For a long time, the primary barrier to entry for AMD was software. Developers were comfortable in the proprietary ecosystem of their primary competitor. But by the start of 2026, the software stack known as ROCm had reached a critical level of maturity. This is the real reason behind the stock surge. The market realized that the software gap was closing. AMD spent years investing in an open source approach that allowed developers to transition their workloads with minimal friction. This removed the walled garden advantage that had protected the incumbent for so long. When software is no longer a hurdle, the decision to buy hardware becomes a question of raw performance and economics. The ROCm ecosystem has matured to a point where it can support the most complex large language models in the world. This maturity has given engineers at the world's largest tech companies the confidence to commit to multi-billion-dollar hardware orders, knowing that their code will run efficiently on AMD architecture. This confidence is most apparent in the deepened partnerships with the giants of the industry. Microsoft Azure, Meta, and Google Cloud are not just customers, they are strategic collaborators. These hyperscalers are focused on a single metric: total cost of ownership. It is not just about the price of the chip itself, but the energy it consumes, the cooling it requires, and the speed at which it can process data. AMD has managed to deliver a value proposition that is impossible to ignore. By offering hardware that provides more compute per dollar, they are helping these tech giants protect their own profit margins while they continue to build out the global artificial intelligence infrastructure. Meta, for example, has integrated AMD accelerators into its massive social media and recommendation engines, finding that the efficiency gains lead to significant savings over time. Google Cloud and Microsoft Azure are offering AMD powered instances to their own customers, providing a variety of options that were simply not available a few years ago. A significant part of this shift comes from a change in how artificial intelligence is used. In the early days, the focus was almost entirely on training, the massive, compute-intensive process of creating a model from scratch. This was where the incumbent excelled, but as we moved into 2026, the industry shifted toward inference. This is the process of actually running the model once it is trained, providing answers to users in real time. Inference is where the volume is, and it is where AMD is winning the battle. Because inference requires high memory bandwidth and efficient power usage, the MI400 series architecture has proven to be an ideal fit. The world is moving from building the tools to using them at scale, and this transition plays perfectly into the strengths of the AMD roadmap. This is where things get dangerous for NVIDIA. For the first time, the choice for a data center manager is not just about availability, it is about architecture. While the industry leader is pushing forward with its Blackwell and Rubin architectures, AMD is preparing to counter with the upcoming MI400 series. The competitive tension is at an all-time high. Internal benchmarks suggest that AMD is holding a distinct price to performance advantage in several key workloads. While NVIDIA remains the king of absolute peak performance for specific training tasks, AMD is carving out a massive and highly profitable territory by being the most efficient choice for the vast majority of enterprise applications. This architectural competition is forcing both companies to innovate at a breakneck pace, but it is AMD that is currently gaining the most ground. Surprisingly, AMD has managed to expand its gross margins during this period of aggressive expansion. By working closely with TSMC, they have achieved exceptionally high manufacturing yields. This efficiency means they can price their products competitively while still generating massive profits. Furthermore, the artificial intelligence boom is creating a pull-through effect for their other products. Every artificial intelligence accelerator needs a high-performance processor to manage the system, and the EPIC line of central processing units has become the gold standard for these environments. Servers need both, and because AMD provides both, they are capturing a larger share of every dollar spent on data center hardware. The narrative is no longer about whether AMD can build the hardware, it is about how much of the market they can sustain. We are seeing a move beyond the big five tech companies into sovereign artificial intelligence projects and mid-tier enterprise data centers. Nations are now looking to build their own localized compute clusters to ensure data privacy and national security, and they are looking for flexible, open solutions. The power per watt metrics are making AMD the preferred choice for a world increasingly constrained by energy limits and environmental regulations. As data centers consume a larger portion of the global power grid, efficiency becomes the ultimate competitive advantage. This transition from a tactical choice to a core structural holding for the next decade of compute is what the market finally priced in during that historic 18% surge. But as the competition heats up, the question remains whether this dominance can be maintained against a rival that is not known for standing still. The acceleration thesis for AMD rests on more than just high-performance silicon. It is rooted in the concept of artificial intelligence sovereignty. As we move deeper into 2026, nations across the globe are no longer content to rely on centralized cloud providers based in a few specific regions. They are beginning to treat artificial intelligence infrastructure as a vital utility, much like electricity or water. This trend toward localized, sovereign clusters plays directly into the hands of a company that prioritizes open ecosystems. Because AMD does not force its customers into a proprietary walled garden, it has become the partner of choice for governments in Europe, the Middle East, and Asia that want to build their own independent compute capacity. These nations want to own their data and their hardware, and the flexible nature of the Instinct series accelerators makes them the ideal building blocks for these national projects. This shift represents a massive untapped market that is only just beginning to reflect in the quarterly numbers. At the same time, the company is seeing a secondary growth engine ignite in the consumer market through the rise of the artificial intelligence personal computer. While the data center gets most of the headlines, the shift toward running artificial intelligence locally on laptops and desktops is a massive secondary story. By integrating advanced neural processing units into their Ryzen line of processors, AMD is ensuring that they capture the value of the artificial intelligence cycle at both ends, from the massive server racks in the desert to the device in a student's backpack. This dual threat is what leads many on Wall Street to believe that the company's valuation may still be conservative. Even after an 18% surge, the gap between its current price and its projected 2027 earnings suggests that the market is only just beginning to grasp the true scale of the opportunity. However, any objective analysis must also consider the bear case. Despite the closing gap, the software moat maintained by the market incumbent is still formidable. Developers have spent over a decade building their workflows on proprietary platforms, and that muscle memory is difficult to displace. Moving a massive enterprise operation from one hardware ecosystem to another is not just a matter of swapping chips, it is a matter of retraining staff and verifying every line of code. There is also the very real risk of what analysts call a capital expenditure digestion period. After years of record-breaking spending, there is a possibility that big tech companies will eventually hit a ceiling on how much hardware they can actually deploy and power in a single year. If the build-out slows down before the next wave of software applications generates significant revenue, the entire semiconductor sector could face a cooling period that tests the resolve of even the most bullish investors. Furthermore, the shadow of geopolitical risk continues to hang over the entire industry. With manufacturing concentrated heavily in Taiwan, any disruption to the supply chain could have catastrophic consequences for global technology markets. While the partnership with TSMC is a source of strength and efficiency, it is also a single point of failure that keeps many risk managers awake at night. The real battle, as the industry saying goes, is not happening on the trading floors of Wall Street. It is happening inside the code of the next generation of large language models. The software engineers who are writing the future of humanity are the ultimate judges of which architecture will prevail. If AMD can continue to prove that its hardware is not just a viable alternative, but a superior environment for specific types of model training and execution, the momentum will be impossible to stop. This success is already forcing a massive valuation reset for the entire semiconductor equipment sector. Companies like ASML and Applied Materials, which provide the tools needed to build these advanced chips, are seeing their own stocks repriced as the market realizes that the demand for high-end compute is a structural shift, not a temporary fad. The world is moving toward a future where every industry, from healthcare to heavy manufacturing, will be underpinned by a layer of artificial intelligence compute. This is why the roadmap leading into 2027 is so critical. The market is looking for supply chain consistency and the successful rollout of the next generation Instinct series, the MI400. This upcoming architecture is expected to further refine the efficiency gains that have made AMD so competitive in the inference market. In the final analysis, the earnings report of 2026 will likely be remembered as the moment the artificial intelligence monopoly ended and the era of the duopoly began. For years, the question was whether anyone could provide a legitimate challenge to the dominant player. Today, that question has been answered with an 18% exclamation point. AMD has successfully transitioned from being a tactical play for those looking for a cheaper alternative to being a core structural architect of the global digital economy. The massive surge in its stock price was not just a reaction to a single quarter of high earnings or a slight beat in revenue. It was the market finally acknowledging a permanent change in the landscape of technology. We are currently witnessing an economic arms race where the ammunition is compute power and the prize is the leadership of the 21st century economy. The foundations are being laid right now, and the companies providing the silicon are the ones who will define the limits of what is possible. For AMD, the journey from a scrappy underdog to a dominant force is complete. The focus now shifts to sustainability and long-term execution. As long as they can continue to deliver on their roadmap and maintain their open ecosystem philosophy, they will remain at the very center of the most important technological shift in human history. The market is no longer pricing in potential. It is finally pricing in the reality of a world built on intelligent compute. Subscribe if you want the full picture behind the artificial intelligence infrastructure race. We are tracking the companies building the artificial intelligence economy in real time. The market is no longer pricing in potential. It is finally pricing in reality.